Capital One Financial Corp. NYSE, COF, has reported the adjusted earnings per share of $2.42 in the third quarter of FY17, beating the analysts' estimates for the adjusted earnings per share of $2.14 according to FactSet. The company had reported the adjusted revenue growth of 4% to $7 billion in the third quarter of FY17, beating the analysts' estimates for revenue of $6.8 billion. Overall, the company has reported net income for the third quarter of 2017 of $1.1 billion, compared with net income of $1 billion in the corresponding quarter prior year. COF stock rose over 1.3% on October 25, 2017, as of 1:51 p.m. Eastern Daylight Saving Time. Source: Google Finance. Moreover, in the third quarter, the total non-interest expense has increased 4% to $3.6 billion. Pre-provision earnings have increased 4% to $3.4 billion, and there is 2% increase in provision for credit losses to $1.8 billion. The net interest margin increased 20 basis points to 7.08%. The company has posted the efficiency ratio of 51.07%. Additionally, in the third quarter, Common Equity Tier 1 capital ratio under Basel III standardized approach is of 10.7% at September 30, 2017. He period-end loans held for investment in the third quarter has increased 3% to $252.4 billion, and the domestic card period-end loans have increased 8% to $100 billion. The consumer banking period-end loans increased 1% to $75.6 billion, in which the auto period-end loans has grown 3% to $53.3 billion. The home loans period-end loans decreased 5% to $18.8 billion, due to the runoff of acquired portfolios. Further, the commercial banking period-end loans have fallen to less than 1%, to $67.7 billion. The average loans held for investment in THE third quarter has increased 1% to $245.8 billion, and the domestic card average loans have increased 2% to $93.7 billion. The consumer banking average loans grew 1% to $75.4 billion. In this, the auto average loans have increased 4% to $52.6 billion. Home loans average loans has fallen 4% to $19.3 billion, driven by runoff of acquired portfolios. The RCIAL banking average loans have increased $190 million, or less than 1%, to $67.9 billion, and the period-end total deposits have fallen $701 million, or less than 1%, to $239.1 billion. While average deposits decreased $1.7 billion, or 1%, to $238.8 billion. The interest-bearing deposits rate paid have increased 6 basis points to 0.77%.